you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to Morningstar. I'm Emma Wall, and here with me today is Mike Prentis, manager of the BlackRock Smaller Companies Trust. Hello, Mike.
Hi, Emma.
So you're here today to give our 3 stock picks. What's the first stock you'd like to highlight?
Okay. I suppose looking around the world, the economy we're most comfortable with is the US. So my first pick really is a company which is almost entirely exposed to the US economy. And it's a company called 4imprint with a 4 at the front of it. And what it does is supplies promotional products to corporates around America. So corporates can go onto its website and choose a whole variety of promotional products, umbrellas, T-shirts, whatever they want, get their logos on them. And 4imprint organises all of that, and then supplied to their customers or proposed customers. So it's a very simple business. The revenues are over $400 million. Have been growing very strongly, 25% plus last year, accelerating if anything. And the nice thing about this company, it's very cash generative, so it can pay good dividends.
I think that's quite a surprise for some investors who are perhaps not familiar with that world, because we'd think that perhaps businesses would be moving towards pure digital marketing. The idea of handing someone a branded merchandise seems pretty 80s, but it seems to be doing well.
Yes, their product range is huge, so I'm sure they can supply all sorts of digital merchandise as well for companies if that's what's wanted.
And what's the second stock today?
The second one is looking at Europe, actually, and the potential for continental European recovery in time, which we think will come. And we've seen some corporates just starting to talk about a bit of an improvement in some of their mainland European operations. So the second company is Northgate, which is a van rental company. Really operates in actually the UK and Spain, and so it's a slight cop-out in a way because it doesn't involve Germany and France, clearly the two major powerhouses in Europe, which are slightly behind some of the other countries. Spain's actually doing quite well. We've seen it in the PMI data recently. And Northgate itself is performing very nicely. We had an excellent meeting with management. They're very upbeat. They're seeing good profit growth. This is a business which was very, very profitable a number of years ago. So the profits are still very much in a recovery phase, and the shares are not expensive. And we feel there's a good bit further to go. And
is this a stock that's going to be best placed to benefit from the QE now flooding the Eurozone?
Well, I think that'll probably help. I'm not entirely convinced that QE is going to make a massive difference, but it's not going to be a negative for a company like Northgate.
And what's the third stock then?
The third stock I'm going to pick is an entirely UK exposed stock and a UK consumer company. We think that many UK consumer companies will do fine, despite the election coming up. Although the one I've picked is a real structural growth story, and it's a company called CVS Group, who run the largest group of veterinary surgeries in the UK, about 250, roughly, all around the country. So, in fact, my local veterinary surgery in my village is a CVS practice now, and so the nice thing is for the vet running it is that she can look after the animals, and the CVS systems are implemented throughout the business as they are throughout the whole of CVS. She can benefit from CVS's buying power, all the drugs they need to get. CVS has much better buying power than she did as an independent practice. And CVS also have a healthy pet club, which people can subscribe to. In fact, we subscribe to it and pay money every month into this club. And it's a very good source of predictable revenue. It entitles you to get certain sort of treatments a little bit more cheaply, let's say. So it's a business which has developed very nicely, partly by acquisition, by lots of small practices being acquired at sensible prices, added onto their network. This efficient process, and actually it's the service they're offering now is allowing them to get good revenue. So like for like sales growth is going up at about 6% per annum. So it's a nice business. It's a structural business, very defensive, I feel, capable of being significantly larger than it currently is, and run by really an excellent entrepreneurial chief executive.
Presumably this sort of business is really dependent on the economy and the consumer feeling confident in the economy. I imagine when we were sort of in the depths of recession, perhaps things, unfortunately, like paying top-notch pet care was not on the top of people's priorities. However, are you confident we've come far enough with the UK economy that this is sustainable?
Yes, I mean, I would say that this is not paying top-notch care costs for your cats and dogs. The aim is to provide very competitively priced veterinary care, and I think on the whole, people who've got dogs and cats, they're key companions in some cases, look after them, and it's one of the things that they're not prepared to stint on too much. But there is, you're right, there is a degree of cyclicality, but it's not as strong in many businesses. So, and I feel this is very much a structural story more than a cyclical story about the business becoming much larger across the UK in time.
So people would rather downgrade their grocery shopping rather than their pet care?
Yes, I think probably buy some cheaper ingredients or not throw away so much food, for instance.
Mike, thank you very much.
Thanks, Emma.
This is Emma Wall for Morningstar. Thank you for watching.